Equities are often credited with being able to provide its investors with long-term wealth creation opportunities, but they come along with risks. Here's a fund category, though, that does help in balancing the risk-reward. This is the Equity Savings Fund category. We're going to be talking about this category and also the Kotak Equity Savings Fund. For that, I have with me Devender Singhal, the Executive Vice President with Kotak Mutual Fund. Devender, hi. Thank you for joining us. Let's give our viewers an introduction into this category. Where does it invest?
So, Bhumina, equity saving as a category is a category whereby you have 10% to 50% of directional equity. You have the balance in arbitrage so as to give you tax efficiency. Now, this is the one category which gives you long-term capital appreciation through the directional nature of the equity, regular income generation via the equity and futures arbitrage positions. It also gives you taxation benefits, considering that a minimum of 65% is invested into the equity and equity-related products at all points in time. And on top of it, at Kotak, we manage this portfolio in a conservative manner so as to give you the fourth added advantage of being conservative and giving you long-term capital appreciation in a much more tax-efficient way.
So you gave us a bit of a brief into Kotak Equity Savings Fund. Tell us a bit more. How do you invest? What's the fund management style?
So at Kotak, we try and be as conservative as possible in managing this portfolio, considering that we want investors who are basically looking at not so aggressive positions in the market on the equity side. So whether be it in equity, one, we try and contain our positions around 30 to 35% of the directional equity versus what we can do up to 50%. We also manage the equity portion in a conservative manner by being more focused towards large cap, which gives you less volatility in general. On the debt part of the portfolio, we don't take any credit risk in the portfolio. AAAs or sovereigns is what we invest in this portfolio. We also don't take any duration calls here. The duration of the debt portion of the portfolio is kept at minimum, less than 2 years. So all in all, the entire endeavor is to give the investors a most conservative approach towards this category, get you a regular income on a steady basis, and try to be as tax efficient as possible.
And what kind of investors is this fund suitable for?
So, as I said, equities give you long-term capital appreciation, and the arbitrage positions gives you regular income along with the debt portion. So anybody who is wanting to have slightly more returns versus what it's getting in a fixed income and is also looking at tax efficiency, this is the right fund category to be in. However, considering that you also have equities, which is a directional equities in the fund, this category is also having a slightly higher volatility than the arbitrage funds. So one should be aware of what is one into getting into. But somebody who's looking at beating the fixed income returns with a slightly more tax efficient manner, this is a very apt category to be in.
I think with that line, you've summed up the Kotak Equity Savings Fund very well. Devender, thank you so much for joining us. That's the Kotak Equity Savings Fund, a fund that manages to provide investors exposure to equities while also balancing out the risk a little bit. Thank you so much, folks, for watching this video. Stay tuned to Kotak Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.